Hero MotoCorp just delivered strong double-digit growth in Q4 FY26. But the real story is not motorcycles anymore. It's the scooters, electric vehicles, and exports that are quietly reshaping the business. Let's break down the Q4 FY26 conference call highlights. Let's start with the top line. And the quarter was clearly strong. Hero MotoCorp reported a revenue of 12,797 crores in Q4 FY26, growing approximately 28.8% year-on-year and 3.8% Q-on-Q. Now, this growth was not driven by just one segment. It was a broad base across scooters, premium bikes, EVs, and exports. And the biggest highlight this quarter was the scooters. Scooters volume rose 48% year-on-year, while the EV scooter business scaled aggressively, growing nearly 2.5 times year-on-year. Premium motorcycles also remain strong, which deliver around 26% growth year-on-year. What's important here is the retail demand continued to outperform the wholesale growth. This suggests better customer traction, strong product acceptance, and improving market share. Hero launched 9 models across 100cc motorcycles, scooters, electric scooters, and premium bikes. This helped them to strengthen their overall portfolio. Export revenue touched nearly 3,500 crores for FY26. The company now operates in 52 countries, with Africa and SAARC as emerging as the major growth markets. Export volumes have grown strongly for 2 consecutive years, nearly 40% on year-on-year growth. So overall, the demand momentum remains strong across both domestic and the international market. Now let's move to margins. And this is where the story becomes mixed. Gross margins declined 300 basis points year-on-year to 31.5%. The pressure came from commodity inflation, rising logistic costs, and higher labor expenses. Importantly, the recent price hikes of 2% were not fully enough to offset the increase in input cost. Despite this, the EBITDA stood at 1,856 crores and the margin expanded 30 basis points to 14.5%. Now, while overall margins saw some pressure, the underlying segment performance was actually strong. ICE business EBITDA margin improved 90 basis points to around 17%, supported by better product mix, price actions, and operating leverage. On the EV side, VIDA platform margins improved gradually, showing early signs of scaling benefits. PAT for the quarter stood at 1,400 crores, with margin remaining stable at 10.9%. Now, this is where the long-term story becomes interesting. Management clearly highlighted that scooters are expected to grow faster than motorcycles going forward. And since EV penetration in scooter is still only 7%, Hero sees a massive long-term opportunity. The company is aggressively expanding its capacity. ICE scooter capacity increased nearly by 50%. EV scooter production are also expected to double in coming years. Currently, the EV capacity stands at around 60,000 units per month. Now, beyond products, Hero is also strengthening infrastructure. A second global parts center is being developed in South India with an investment of around 700 crores. This will support export, aftermarket operations, fast supply chain execution, and more importantly, Hero has now sales touchpoint across 93% of India's talukas. That gives a company a distribution massive advantage. At the technological level, Hero continues to invest in flex fuel engines, EV platforms, low emission technology, Gen AI-led customer engagement systems. Looking ahead, management remains optimistic. The industry is expected to deliver high single-digit growth, supported by strong rural demand, healthy monsoon, premiumization trends, and now the biggest long-term drivers will be the EV expansion. The biggest long-term growth drivers for Hero will likely be EV expansion, scooter category growth, exports. The company plans to continue expanding EV capacity, launch premium products, and deepen the exports. In exports, Africa and SAARC remains the key focus regions. And the management specifically highlighted that Bangladesh alone still covers around 50% of the addressable market, which means significant growth headroom still remains. If I summarize this entire call in one line, Hero MotoCorp is no longer just defending its core motorcycle business, it's actively repositioning itself for a next phase of mobility growth. Yes, short-term cost pressure may remain, but the combination of scooters, EV scaling, premiumization, and export could become powerful long-term growth engines. And if execution continues like this, Hero could emerge much stronger in the evolving two-wheeler landscape. If you found this breakdown valuable, make sure to like, subscribe, and share with someone who is serious about markets. And comment below which company's con call should I decode next.